I'm very excited to welcome Liam Connor, who knows the Cosmos ecosystem inside and out. Very exciting ecosystem, growing, but also undiscovered, right? Potentially a hidden gem. We love discovering hidden gems in the middle of a crypto winter. There's nothing better than that. So welcome, Liam.
Thanks, Eliot. Thanks for having me here. And yeah, I'm just excited to talk about Cosmos. Even if only a few people come away from the chat, like knowing a little bit more, then that's a success, in my opinion.
Like what's going on is incredibly exciting. So we want as many people to actually know about it as possible. So could you just start with kind of like why you're focused on Cosmos ecosystem specifically? What makes the technology special, unique, valuable?
Yeah, sure. So I think for this question, Elliot, I'll just give a bit of context about like how I got into Cosmos in a way, because I started investing in crypto in like 2017. Like what a lot of people kind of got in around that time, right? Like the Bitcoin price was just going up and then altcoins blew up afterwards. Um, and like over time, I was like starting to refine my understanding of crypto and blockchain. And I was just like reevaluating my investments, like not trying to like just make a quick buck on random altcoins, right? And actually start to like see where the crypto space is going. Um, and there's a lot of like different chains that can host different products on, right? So you have Ethereum hosts a bunch of different applications, so exchanges, NFT marketplaces, all kinds, like even more than just those, but they're the kind of main two. And so I started like thinking about like these other alternatives to Ethereum, right? So like these other chains that could be maybe host some really strong apps, and really kind of like catch up to where Ethereum is. And then Bitcoin's kind of like its own chain doing its own thing about money. So it's not really in direct competition with Ethereum and other chains. But a lot of these newer chains, they are about deploying code and contracts on the chain. So that means you're getting applications, you're getting products, you're getting computation on those networks. And so like I kind of looked at Cosmos in the sense of like this small like this ecosystem of small states, right? So when you think of Ethereum, you think of it as like this nation state, and then you have a bunch of different cities, or like the cities are like the products, the applications on the chain. So it's kind of like this big nation state. It's got a bunch of different products and services on the nation state. And then you look at like Polkadot and Cosmos, and you start thinking, hey, like these are like kind of saying, hey, we should have loads of different chains. It shouldn't be a nation state. It should be a bunch of smaller states that are all interoperating with one another, connecting with one another via bridges. Think of these bridges as big highways between cities, like they're interoperating with one another, sending tokens, sending messages back and forth between them. And that's how I got into Cosmos. And the reason I only focus on Cosmos now is there's so many chains launching there and so many products that I think there's enough opportunities within Cosmos that I don't need to kind of branch out too much, except for investing on like the basis of a counter thesis to the Cosmos ecosystem. I don't know if that answers your question fully, but I can go into like more detail if you have any like follow-up questions or anything.
No, that's a great picture. The question there is, so you're right, it's a group of nation states all connected. Now, why are all these nation states gravitating to Cosmos? They're like, what makes the technology so special?
Mm-hmm. So I think there's like a few different components with Cosmos. There's the underlying like that there's different like code repos, right? So you have this kind of like technology stack that makes it very easy or easier, because it's never super like easy to launch a blockchain, right? It's a framework. They use something called Tendermint and Comet BFT, which is basically like all of the repos you need to basically launch a chain that's a Cosmos chain. So that's the first piece. And like if you can basically launch a chain and customize how that chain operates, then you can customize it to be operating in a way that's more beneficial for your product or your business. It's more efficient, or maybe it's got better throughput, better transaction speeds, or maybe there's some other customization that really enhances your product, whether it's a DeFi exchange or an NFT marketplace. So that customization, that sovereignty is really powerful. So like when you're an application, when you're a product and you launch in crypto, you have a few different options, right? You can launch as an application on a chain like Ethereum. And this is what Uniswap did. It's one of the biggest exchanges. So hopefully most of your listeners know of Uniswap, and yourself as well.
Yeah.
And so like that's one option. The second option is you launch an entire chain, right? And this could be just for your one product, or maybe it could be for other products to come onto as well and join. So you might launch a chain for your exchange and then say, hey, if you've got maybe like a perps exchange, or if you've got an NFT marketplace, you can also launch with us. If you've got a lending and borrowing product, come and launch in our chain as well. So you can launch a whole chain, or you can launch an application. And the thing with launching a whole chain is it's very challenging, right? Because you've got to build like a validator set, or you use proof of work for mining. You've got to kind of keep the code repos for those chains like up to date. And very quickly, it becomes very, very difficult. So this kind of like framework, this like Tendermint and then Comet BFT framework allows people to launch a chain really easily and get the benefits of sovereignty and customizability. So that's why I see a lot of stuff happening in Cosmos, because you can launch your own chain. But then the second stage is connecting all of those chains, right? Because, Ethereum doesn't need to connect to a bunch of chains to get like a network effect, because it has 50, 100, 200 applications on the main chain. But when you're launching your own chain for your own product, how are you going to connect to Ethereum products and like kind of interoperate with them, create like strategies or build on top of DeFi Legos on Ethereum? And the way you do that is by bridging with them. And so it's super important in Cosmos to be able to connect with other chains, because your chain might just have one product. And if it's an exchange and you want to tap into, say, a lending product, you might have to connect to another chain through a bridge. And Cosmos has the IBC, which is an interoperable bridge. It's trust minimized, so it's very secure. And it just creates that kind of network effect on a multi-chain level that you'd get on a single chain level like Ethereum. So I think those are the two key ones, I'd say. I don't want to go into too much depth.
No, that makes a lot of sense. And I can see why, like, very quickly, how as the blockchain world evolves, like solutions like this ecosystem are going to be so valuable, right? Because many companies are going to be wanting to launch their own products, and it's like, oh, well, Cosmos already has a solution. And I can just see how it just snowballs from there, because they don't want to have to spend hundreds of millions of dollars or millions reinventing the wheel, essentially. So I can see how that blows up really quickly. That's great. So then the question is kind of like, you hear about these bridge hacks all the time, it's hard to have faith in bridges just because you always hear like, oh, the bridge got hacked. Well, it's like, why has the IBC chain ever been hacked? Why is it so secure?
So it's because of the design of the bridge. I don't want to go into like too much technical detail, but a lot of the time when you have a bridge between, say, Ethereum and another chain, you have what's called a multi-sig like address, like a multi-signature wallet. And what that means is if someone deposits tokens into the bridge to send it from Ethereum to, say, Binance Smart Chain, usually what happens is you deposit on the Ethereum side into a multi-signature wallet, and then you get basically some people to sign for those tokens to move over to Ethereum. So there's a big centralization risk in this multi-signature wallet. If that's compromised in some way, the bridge is basically broken and funds are drained. And there's a few other ones there's probably like a few other attack vectors. I don't have like the knowledge to kind of break them down in detail, but with IBC, it's what you call a trust minimized bridge. So there isn't a multi-signature wallet where you have a centralizing kind of point of failure. What it does is it takes the validators of the two chains that you're bridging from. The validators are just securing the network, producing blocks, right? And then it has something called a light client, which basically gets all its information from those validators. Long story short, in order to basically attack IBC, you basically have to attack the two chains where the bridge is connecting between. So inherently, it basically gets the security of the chains that are bridging between one another, rather than relying on a multi-signature wallet or some other form of security. So it's the most decentralized way of bridging, trust minimized, we call it, because it's not necessarily fully decentralized. And it really reduces the attack surface.
Okay, great. So the technology is there. Is it growing? Can you speak to kind of the ecosystem growth and recent developments in that space?
Yeah, absolutely. So there's actually a really cool website, Eliot, you can check out called mapofzones.com. I'm not sure if it's something you've come across before. Just mapofzones.com for the people listening. And what you can see there, and it's not the perfect information, like it doesn't include everything. But you can see all of these different chains in this map of zones visualization. These are all Cosmos ecosystem chains. You can see like all of these little pings between these chains in this visualization. And that's all data or tokens being sent to and from all of these different chains through IBC. And if you go back 2 years, there was about 10 chains. I think IBC launched with about 8 chains to 10 chains connected. On Map of Zones, there's now 64 different chains interoperating with one another through IBC, all built with that blockchain framework that I was talking about earlier, which is Comet, BFT, and Tendermint. And you can see the volumes of transfers between chains on the right-hand side of this visual. So IBC is now transacting millions of dollars, and it will grow the more chains launch in this ecosystem.
Yeah, that is massive. I'll put that up on the screen. That's just so huge. And so that visualization is actually based on real data.
Yeah, real data. Yeah. This is
Okay.
happening as we speak, basically.
Right. So I love seeing crypto.org. Okay. Crypto.chronos is on here too. Akash is BNB part of this ecosystem? I thought it was. No.
It's like a weird one. So it doesn't have IBC connected to it yet. So what they did is they took a fork of Tendermint and launched like a slightly modified version. And this is also what Polygon did. So these are both chains that use Tendermint and the kind of framework that Cosmos provided, but they made a slight alteration and then launched with a slightly different customization. So the challenge is bridging to them is a little more tricky. There are teams working on bridging Polygon and BSC to this ecosystem. So we could include them on Map of Zones once that's possible.
Oh, that's great. Okay, so that's coming. So then the question here is, obviously this is incredibly exciting, like in terms of network effects. So then like the way to get exposure, I mean, there's many ways, but the Atom token, what is it and how does all the value of this ecosystem kind of accrue to the Atom token?
Yeah, this is a spicy topic actually, because there's been lots of criticisms over, let's say, the last 3-4 years that there's not enough value accrual for Atom, right? Like this Atom is not capturing enough value from this ecosystem, right? This really expansive ecosystem. Like just for context, like DYDX, which is the largest perps exchange on Ethereum, is literally launching its chain today. It's moved from Ethereum to Cosmos. Wormhole, one of the biggest bridges, has launched a chain on Cosmos. And so, what we want to see is more chains kind of pivoting over.
Yes, that's right.
But in relation to Atom, like where is this value occurring? How is Atom benefiting from DYDX? How is Atom benefiting from all these chains launching, right? And the real challenge was when the Atom token launched and when the Cosmos Hub launched, the first blockchain in this Cosmos ecosystem, they weren't really focused on like seeking rent and accruing value. They were kind of like under the philosophy of like, hey, let's build all this out. Let's get all these people in this ecosystem, and then let's get the value to accrue later, right? Once this ecosystem is big enough, we only need to get a small piece of that to really be successful, right? So they're kind of pushing the space forward, getting more chains in their sphere of influence, and then later on, they can start providing products and services. So that's actually where we are today in 2023. So the Atom token is predominantly used to secure the Atom chain through staking, right? So I won't go into the technicals, but essentially you can earn at the moment, as of the time of recording, about 20%, 18 to 20% yearly from locking up your Atom to secure the Atom blockchain, right? And so it's got billions of dollars of security from Atom for this chain. So one service that the Cosmos Hub can provide is to start securing other blockchains with their validator set and the Atom token. And in return, those blockchains will pay a fee to Atom stakers. Maybe they'll pay it in some other form. So you can start seeing like these partnerships form between the Cosmos Hub and other chains in this ecosystem, because some of them only have 10, 20, 30, $50 million of value in their tokens, right? So that means to attack the chain, you only need a few million in some cases. But if they get secured by a $2 billion asset, then that makes it much, much harder. So that's one option. Another option is by like propagating Atom into like these other chains and kind of like creating this money kind of property for Atom, where Atom's being used in exchanges on like all of these chains and so on and so forth. So it's kind of like a service focused approach, and it's still very early, but that's the direction that I think Atom will be going towards. So as long as the Cosmos ecosystem space grows, and as long as Atom has relevance, then I think there is a correlation between Atom growth and the Cosmos ecosystem growing.
Yeah, that makes total sense. So we're still so early, all the use cases haven't been determined yet, but as the network grows, use cases will expand and the potential value of the token will expand. Okay, very exciting. And so how is I have to ask, like, because now it's like all of a sudden we're relying on someone to make the right decisions for the Atom token. So how does the governance work?
Yeah, so governance is really important, right? When you think about life, everything is politics, in my opinion. Obviously, politics is like one of those words where you get turned off when you hear it, but that's everything. Like just trying to organize who's meeting who at what time, what restaurant, that's all politics, right, between groups. And so when you look at crypto, you have the same thing. When you look at businesses and blockchains, like you have the same thing. You have politics, it's social consensus. Now on Ethereum, the social consensus is code is law, right? And then there's like this rough consensus around that where they kind of like come to like a rough agreement on how to push the chain forward. Now, what Cosmos does is they have on-chain governance, which means rather than doing this rough consensus model, which is basically like me and you, Eliot, for example, saying, hey, where are we going to go for dinner tonight? We're not like voting on it. We're not getting a piece of paper and like ticking a box saying, hey, I want to go to a sushi place. And I'm saying, no, I want to go to a burger place. We're just kind of working it out by talking. And that's what Ethereum does. But on a chain, Cosmos chains, there's a decentralized autonomous organization at the center. And so you go through this on-chain voting process where Atom holders who stake get to vote on proposals that are submitted on chain to make changes. So it works very similar to rough consensus, but you have this final vote at the end, right? Where it goes on chain, everyone votes based on the Atom tokens they're staking, and whichever option the majority of Atom votes for, that's how the governance passes. And then in the background, there's all this off-chain stuff going on with like forum discussions on Twitter, and so on. And even backroom discussions as well between devs and stuff like this. Does that answer your question? I can go into more specifics if...
Yeah, no, that makes total sense. On-chain voting. And in theory, the teams that have been this successful will continue making the right decisions and growing the ecosystem. And but it's interesting. I had this thought the other day. I was like, that DAOs seem like pure democracies. What if you made them like a republic, like Western democracies use now? Like maybe that, because they seem to be more resilient than just like a pure democracy, but just something to think about it maybe, right? Because pure democracies can go crazy. You never know. But I mean, in theory, if people are voting, they're going to vote in their best interests. You would hope.
What I will say in response to that, Cosmos governance is the best or most tested governance in crypto today, but it has a lot of problems still. Like this is not solved. Like think how long it took to get to republics, like you say, or like how long even democracies take to form in the world, right? And like clearly democracy today has so many problems, but they've had thousands of years to form. So now you take like these crypto DAOs and models, they've been around 10 years. DAOs probably haven't even really been around 10 years yet. And so we're still super early. There's going to be a lot of teething problems, but over time, we'd like to see governance get more effective. You can kind of create sub DAOs to delegate responsibilities and stuff, but this is all in the future. Like right now, all of it's on chain. And then in the background, there's like rough consensus kind of working out like which proposals to submit on chain and stuff like this.
So far, decisions have been really good. And so this goes to tokenomics. It's a very inflationary model, right? The token. Could you talk a little bit about that? Because clearly we're in the early stages. Maybe there's inflation right now to fund the ecosystem, but then maybe in the future that'll be tampered and maybe it'll go deflationary one day. Who knows? Is that kind of what you're thinking?
Actually, yeah, this is what's being discussed right now. So, when you think of investing, right, I don't know how like maybe your viewers or yourself approaches investments, but especially when you're looking at like sophisticated institutions and they're investing in like commodities or stocks or crypto, they want like guarantees, right? They want to know like what the supply schedule is going to look like in like the next 5 years, like stuff like this, right? They want to know how much gold is getting pulled out the ground. They have all these calculations based like on the price of gold and the incentive to mine it and all of this stuff, right? And so it's kind of the same in crypto. Like investors want these like guarantees about the token supply, about the vision of the project, where it's going. And so like at the moment, the atom supply can inflate infinitely. And there's a dynamic rate that it inflates by, which is kind of based on how much atoms staked. So it could go as high as, say, I can't remember what the min and the max are. I think it's something like 7% min, 20% max a year. But if you compound 20% a year for 20 years, you know, the supply goes wild. It goes crazy. And like investors are like, no, we don't want this. Like, we're not investing in this. Doesn't make sense. We don't know where the supply is going because it's dynamic as well. So it could be it goes up 20% a year for 20 years, or it could be it goes up 7% a year for 10 of them, then 10% for 3 of them. And you get the idea, right? There's no certainty. Mm-hmm. So like this is the atom tokenomics problem. It's like, hey, there's no certainty on the supply. The inflation rate's dynamic. So it changes. And yeah, we just don't know like what's going to happen. And this affects price. So there's been multiple kind of initiatives, I would call them, to change this model of inflation. And it basically starts by creating products and services around the atom token. Because at the moment, that inflation rate's there to incentivize staking. And staking is really important because it secures the Cosmos Hub chain. And it's super important because also the Cosmos Hub secures other chains right now, such as Neutron, if you've heard of them, or Stride, which are 2 chains in Cosmos, basically. But we need to kind of basically get to this point where that inflation is no longer needed. We can put a fixed supply on there and a clear inflation schedule. And this is coming. Blockworks Research is doing some work on this. They're like quite a prominent crypto company. Mm-hmm. All of this stuff, basically, Eliot, is happening, but we're still working through the details. But right now, that's the focus. Atom supply, tokenomics, and Atom's role in providing services in the wider Cosmos ecosystem.
Perfect. And that's why I'm not worried about inflation, because they're working on it. I mean, they could do a burn mechanism to take some of the supply out. They could do so many different things to handle it. But for now, we're just enjoying the passive income. So
exactly.
Yeah.
And it won't be there forever. Like these staking rewards will not be as, if I had to guess, I think in 1 year, like the staking rewards will not be anywhere near as high as they are.
Oh, you think the tokenomics are going to be adjusted within a year?
Yeah, I think so. Literally Blockworks Research was funded like however many Atom. I imagine it was something like 100,000 or something, quite a lot of money, like $100,000, I mean, to basically work through this and create a new tokenomics schedule. And so like the main focus now is like, yeah, Atom can be the service chain. It provides services. It has an economic zone around it. And then the token can become money in the Cosmos ecosystem. So it can be used just like Ethereum is in all of Ethereum's applications, right? But instead it's used in Cosmos applications, Cosmos ecosystem applications. And that's really important for money because it creates supply sinks. It gets people to hold the token. And as soon as you get that circulating, it gets really, really powerful.
Yeah, absolutely. That does get exciting. That's why the network growing is huge. And so this seems to hit on all levels. We have the network adoption, we have the great technology, we have the governance. So then the question is kind of like the last one, future vision here. Like there's so much going on in crypto, so many different ecosystems. You have one chain, then you have the Polkadot interoperable ecosystem, and you have Chainlink trying to connect everything via Swift. And then you have Cosmos, which is a massive interoperable ecosystem. So what do you think this all looks like in the future? Will it be winner take all for one of these, or will it be just a huge multi-chain world?
I think we'll have a huge multi-chain world. Winner takes all isn't correct, right? But there will definitely be a long tail. So you'll have like real like chains that have really hit like product market fit, have hit that network effect. And you'll have like massive chains with massive valuations, like you have Apple and Microsoft and Tesla, and then very quickly you get the long tail and you start getting very quickly down to like $1 billion valuations in stocks, and then very quickly down to like much lower rates. And I think it will be exactly the same. But what I see is like blockchain infra is kind of like the internet. It's like a utility that can be used by a bunch of different products and applications, and all of these things combine into like a wider experience, I guess. So what I will say is on Ethereum, you have a bunch of rollups that have launched. So you might be familiar with Arbitrum, Optimism, ZK. There's a ZK rollup, right? There's Base, Coinbase's rollup. There's so many, right? And these are all separate chains that basically connect to the Ethereum main chain. And this is basically the Cosmos vision, right? Cosmos was doing this before Ethereum. Ethereum's kind of shifting towards a multi-chain world itself because you can't put everything on the Ethereum main chain. Gas fees are too high. There's too much competition for block space, which causes this like increase in gas fees. And like products need to kind of have their own environment to operate within, its own execution environment. And the reason for this is because imagine you're a DeFi exchange and your main thing you're looking for in your execution environment is fast transaction speeds, right? Because you don't want to have users wait 5 minutes to be able to like buy their token on an exchange. They're just going to go and use Binance or Coinbase. But now you have a different application that's like, hey, we don't really care about fast transactions. We're more interested in secure transactions, or we're more interested in something else, privacy, let's say. And so basically you have these trade-offs, like one team wants fast transactions, the other wants something else to be fixed. And this is a problem on Ethereum because that means Ethereum can't cater towards both applications because the directions they want to go in are opposites.
Right.
So that's why you get layer twos and new chains. And so Ethereum's going down this route, Polkadot's going down this route, the Cosmos ecosystem has been going down this route since 2018 when it was incepted. I think it was actually earlier than 2018. I think that's just when the token finally went live. And so where I see this space going is what you see today as the Cosmos ecosystem, that map of zones visualization, that is all of these interchains, like products connecting. So this will have like the Ethereum chains on there. This will have the Polkadot chains on there. It will have all of them. And like, this isn't Cosmos as an Atom token. This is just the wider interchain. And like within this interchain, there'll be hubs of activity, just like we have in the world. We have hubs of activity, or it's a big city or a nation. And like each hub will have its own user base, its own specialization, whatever. And so the way I see the Atom token and Cosmos is one hub in the bigger interchain kind of vision. And I think we're all going in that direction one way or another. And some of these hubs will be single chains, like Solana could be a hub with just every app on one chain as well. But everything's going to be connected. And yeah, that would be my answer to your question. I think that was hopefully well answered.
No, it is. I mean, it definitely has a place in the future. That's what really matters, right? We're just trying to survive the bear market. Like if something has a place in the future and strong network effects, that's kind of what matters as far as investment goes. So this is clearly doing very well. So very exciting. Very exciting.
Still challenges, like with any early startup, right? Like this nothing's guaranteed. So I don't invest only in Cosmos. I'm in like a bunch of stuff. But there are a lot of opportunities with Cosmos chains as well.
Yeah. So the very last thing here. So proof of stake, I have to ask you because it's just really right on top of my mind right now. So okay, so you're saying, $100 million asset is vulnerable because it only takes a few million to attack it. What about a 2 billion? Could you attack it with $3 billion? Like, how does that work for proof of stake?
It's actually like not that simple to explain because there's various different like attack surfaces.
Okay.
But generally, like the way to think about it on a very simple level, and this isn't like every attack surface, but let's say you have a chain with like a $10 million market cap and all of the tokens are staked. So they're secured by $10 million on the chain. And now let's say that chain has $1 million of TVL. So $1 million of assets on the chain being used in like DeFi or something. You're probably not going to attack the chain because you're going to be spending like $10 million or however much. It's going to be a lot to basically extract $1 million in total value locked. But if it's a $10 million like market cap chain and there's $200 million worth of assets on there, suddenly the incentive to go after that chain becomes much, 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 much higher. And so the idea is like, if you're going to have a lot of value on your chain, you need a big market cap securing that chain through staking, because it becomes very attractive. Like it's like a honeypot to go and attack the chain. It gets more complicated because you have to think about like how markets work and liquidity and slippage, and like buying up the token to attack the chain gets expensive because the price goes up. And then there's other types of attack surfaces to consider. The long story short is lots of value on the chain, like lots of DeFi products, lots of tokens. You need a high market cap. And the idea behind that is Atom's got a $2 billion market cap. So you need a lot of money to attack it. And therefore, you should probably secure your chain with Atom if you're planning to have a big DeFi ecosystem and you don't want to stress about getting your token value up or creating like a tokenomic design or getting investors onboarded and building a validator set and all of this stuff.
Yeah, that makes
does that answer your question?
It really does. Yeah, that makes so much sense, especially because like as someone tries to attack it, the price will go up and we're already at a few billion and the inflation's making the market cap bigger. So that's all so helpful. Thank you so much for your time. Really appreciate it. Where can people go to learn more? And if you have anything else to let us know, please do.
Yeah, so I think like the best place to learn about crypto is just on Twitter, right? Twitter and YouTube is amazing. There's like a bunch of Cosmos people you can follow. So you can find me on Twitter. It's at L1AM_crypto. I do like a few posts here and there, but really there's like a bunch of other Cosmos ecosystem people to follow. I'd follow CryptoCito, and just some of the biggest developers are great people to follow as well to understand what's going on. So Zaki Manian on Twitter is a really good one. Ethan Bookman, founder of Cosmos, really good one. Jack Zamplin. And Map of Zones. Honestly, actually, yeah, this is what I'll say. So go to mapofzones.com, look at all of the different chains on there. Take time just researching one chain at a time, right? Like it does take time, but you can just basically get everything you need just starting with Map of Zones and then selecting chains to look into from there. And then once you're kind of more involved in the ecosystem, if you find that you want to learn more, get on Twitter, start following people. You can find blogs, you can find documentation.